What's going on, everybody? It is January 15th, 2025, day log episode over at Q, and the live stream review, which was CPI, was a successful day. I'm very pleased with the overall result of today. Hopefully, I might have to adjust this camera a little bit. I'll do it tomorrow. But if you looked at the weekly forecast and you looked at what I was saying on Monday and on Tuesday, and then going into today, if you look at the price action between today versus yesterday and Monday, it is a complete distinguish between the two in my eyes, where the moves are more clear, the draw on liquidity is more clear, the delivery is easier, and the trustworthiness behind it is a lot more. And this is what I was talking about on Monday and on Tuesday. And for those who listen, who are watching these videos, who watch the live streams, I appreciate you. You're the ones who actually want to learn. I'm giving or lending my experience that I've learned through ICT and learned personally, that trying to force a Monday or a Tuesday before a major news event driver, and this goes for FOMC, goes for NFP, goes for CPI as well. In this instance, we had CPI, which was today. Those days leading up to it can be low probability, and the delivery is harder, the models aren't there as much, there's a lot of things in there that are going to be a little bit more difficult. So hopefully you learned that from this week so far, and you're able to see how the delivery today was a lot easier. And I also want to add the draw on liquidity, the destination as far as where price would want to lead to, was a lot easier. So let's go out to a daily time frame. Let's take a look at that. Let's kind of readjust to the week and what we were looking at from Sunday, since we've had such a significant movement in price. And I think that's very important when you have very large movements, or even looking at Sunday when you have some type of analysis and you get into the midweek, you kind of want to reevaluate, see if things are going according to plan, if something's changed, if you need to readjust. And since we've had such a large movement today, I would like to kind of reanalyze, see where we're at, see what we could do in the next 2 days to end off the week and prepare for that. So the way we closed today, we made a higher retracement. Now again, if you go back to the weekly forecast, I said since we made a new low on last Friday underneath this structure's low here, that can do what? That can allow price to move back into a short-term premium. Where's your short-term premium? Well, from this dealing range high to this dealing range low, equilibrium sitting right here. So that short-term premium has been met. Now what's inside of that? Well, you have this bearish order block, which is your up close candle. Extend that to your right. That is your bearish order block. What's underneath that? A small little inefficiency that's resting right here. So do I think that the full-on retracement is done? As far as, if we were to look for lower prices out of this, I don't know just yet. We'll have to see how tomorrow ends up looking like, if we see lower prices out of this or not. But I'm still leaning bearish. Nothing has changed. All we did was just have this retracement, taking out that internal buy-side liquidity. Internal meaning from that high to that low. All that buy-side was internal. We're taking that out, and we're going to see if that's going to provide relief now to see further downside away from there. So look at your weekly time frame. This is always good to go back to, especially when you're midweek. Look at your buy-side imbalance from over here that we were utilizing last week. We now close beneath it. That turns into an inversion. So all we're doing is retracing up into that. That doesn't mean we're bullish, doesn't mean we're going to switch our bias and see higher prices out of this. It just means that this could be acting as a resistance point to where we see a ceiling in Layton's terms, and then we see a drop lower. And same thing here, the daily time frame, nothing's changed. The market structure is still bearish. We're going up inside of a premium. So hopefully that's clear. I do think that we may have a little bit higher retracement possibly. I like this sell side imbalance, which is resting up here. So if we extend that to our right, that may line up with the daily time frame bearish order block as well. So inside of that sell side imbalance, you also have this inversion fair value gap that's resting right there. So from that dealing range high down to your low, we're inside of a premium currently, but I want to see that be met first before we really expect to sell off. So today I thought was really freaking easy. I thought it was really easy. And that's what I mean by like low probability days versus like high probability days. High probability days are easy. They're not hard to predict. They're not hard to get into moves. They're not hard to find targets for. It doesn't feel like work. It just feels like, okay, here's what I'm looking for. I'm waiting for a certain period of time to engage with price, and I execute on my model, and it ends up playing out. Sometimes it doesn't, but for the most part, a lot of your losses or a lot of difficulties that we do have as traders or within even ICT's concepts is operating in low probability environments. And really the main issue is patience and being able to be patient and sit through multiple days where you may be questioning, in hindsight, well, there's a move here, a move there. Understanding high probability environments versus low. Obviously, there's a lot of characteristics behind them, and I've discussed them in length. If you're able to operate in them, and only able to operate in them, I guarantee you will have a way higher percentage of win rate. You're going to have less stress, less fatigue, less emotional imbalances all the time. And the main dividing block between that is just patience and trustworthiness and confidence in that, and confidence in your system, because we can lose that when we're not trading. We can lose that and almost start having doubt and underconfidence creep into our trading, where if we're not engaging with price, it feels like we're not actually working. It's cliche and it's said all the time, but when you're not placing a trade, that is doing something. You are working. It may not feel like it because you're not technically taking an action, but doing nothing is an action in and of itself. That is an action, and that's a progressive, profitable action if you're doing it at the right moments. Now, if I was to be taking no action and kind of being, a little bit more lazy with a day like today where I'm not really engaged with, that would be a fault on my end, because I'm already aware that today should be high probability. I'm more willingly to engage with today's price action because my experience in ICT's education has told me that something like today should be higher probability. And if I see the things playing out that I've been taught, and I see the things that I have, in my model and in my plan, then I need to execute on it. I can't have fear. I need to execute on it and manage the risk the best that I possibly can. So I think it's very, very important, man. Those steps are crucial to me. If I was able to go back in time and tell myself these things, it would be a crucial step in my ICT development, and even just any other trading style. But just being able to operate in good environments, man. It's like, if you're to pick a day to go to the beach or, do fun things outside, you only want to pick days where it's sunny and it's beautiful. But you don't want to go outside or go to the beach or whatever it may be, when it's raining, it's storming, or whatever, the weather's not right. You want to be operating in times where the weather is right. You can still get things done when it's cloudy and things like that, but why feel the need in my eyes? So as far as today, we had CPI that released. I was looking at yesterday, we built up these relative equal highs. If you watched last night's daily log video, we engineered these relative equal highs for CPI. Stable will probably take those out with CPI. And right here, once we closed on CPI, that was a huge determining factor to kind of let me know that it's really one-sided. Sometimes CPI is this two-stage delivery where you have the CPI release, then the open / silver bullet comes in and it drops it the other way. But sometimes the open and silver bullet just carries on. It's a continuation. And the reason why I was really sold on higher prices is because of these relative equal highs. If we close above a sell side imbalance here, that's telling us what? That's a change in state and delivery from bearish to bullish. We're not respecting bearish PD rates, and we're very close in proximity to these relative equal highs. So even if I was going to be shorting it, I need those to be taken out. And even if there was SMT this morning, I think that's what a lot of people doubt. Sometimes is SMT. It's like, well, there's SMT there. It's like, well, there's a lot of factors as far as that, but even if there's clean liquidity like this, where it's just too clean, what we see in these concepts, then I can't even short it. There's no either option. SMT is just a confluence. You have to understand that. It can be tricky for some people, and it was tricky for me, but it's the last step in a lot of things. It's not the first. So let's go into today's trade and what we were looking at today. So keep in mind of the highs that we had in mind, which was 21,390, which was resting here, and then 21,448 is eventually, or 21,450 is what we traded to. But in here, I had the opening range gap, which was on the chart. And if you go back to, I'll have to bring it up. That's very crucial as well. This step is this opening range gap. I said, if price is looking for a continuation date and you have a very large opening range gap, then off of the open or going into a silver bullet, all you want to see is 25, maybe 50%, depending on how big it is, 25 to 50% of it to be traded into, and you want to see it leave it. If it leaves it, and you start seeing bullish models, or if you're in a bearish form, you want to see those models being respected and trading off into higher liquidity. And that's what we did. And we also are trading down into this imbalance, this 15-minute, the 5-minute. This is a large buy-side imbalance, but we're trading down into that. So CJ, we should be waiting for discounts to be met before trading into higher prices. No, we don't. If price is in a hurry to get somewhere, why would I be waiting for this 50% to be reached into? If I know this opening range gap is here, then it's reaching into that 25%. It's basically just in a hurry to get somewhere. So all I need to see is that confluence. I pointed this out step by step in the live stream. Before this all happened, before the open, I want to see it drop into this, reaction away from it, see another reaction off of a bullish PD rate, and it'll give me confidence to long it into 21,390. Go back to the live stream, it was all there. So knowing that, the first step of all of this is knowing the direction. You know, we can see models all the time, but if you don't know where the hell you're aiming or driving towards, like a car, if you get in a car and you don't know what the hell you're punching into the GPS, then you're going to have a very difficult time getting there. And in here, I knew where our price was most likely to head towards. So I know I'm focusing on 21,390, and I want to see evidence of lower time frame models appearing, being respected, and then I will enter into it. So off the open, if you go into a 1 minute time frame, this is what we're watching. We're watching this drop lower in here, right? Price takes out a swing low off the open, takes out anybody that was willing to have sell stops underneath this, takes out the swing low, displaces higher. This up close candle here becomes what? A bullish breaker. You have a low, a high, a lower low, then you have a higher high right there being printed. That last up close candle, this becomes your bullish order block. So that right there is your bullish order block with a inefficiency buy side imbalance inside of that, and that becomes basically a launch pad. Now in the real moment of time, just be due to the time, it was only 12 minutes after the open, I felt a little uneasy operating in this right away. So I was okay with letting price trade without me, because I know, again, we have so many tools in our tool shed to where I can operate in this market, not at any point in given time, but if, you know, as far as the fear missing out part, you really don't have the fear of missing out with these concepts. As long as the draw on liquidity has been met and you want to see a little bit more confirmation, and you feel a little uneasy as far as the time or whatever it may be, you can let things play out and re-enter in the market. Not re-enter, but let things go. So in here, we drop back down into this bullish order block here. If you go out to like a 5 minute time frame, price is probably dropping into, if I remember my memory correctly, we're dropping into this. We just met that low, I believe, this inefficiency there. These down close candles would act as your bullish order block. I was really looking at in the moment of time of possibly this imbalance, and I just didn't really like it at that moment of time. I wanted to see it drop maybe possibly lower back into this breaker, and we didn't get that. And as soon as we displaced higher and we created this bullish order block, I was really watching a 15-second time frame, and then here's where I entered. My stop was beneath this low, because since we've dropped into this, we displaced higher, we created a bullish order block. At that point, price should be willing, going into the silver bullet right at 10 a.m., should be willing to displace right into that 21,390. And we did so beautifully. So that was a framework of today. We utilized this buy side imbalance right there. We utilized this up close candle, which would be your mitigation block. So we use that buy side imbalance and this mitigation block to propel price basically into 21,390. I kept a position on. I trailed my stop to see if we could get a little bit higher prices, but ultimately we just wanted a little bit deeper retracement before going higher, which we did today. A couple things in here. We kind of slowly trailed off lower into a deeper discount retracement. So from this dealing range low to that high there, equilibrium sitting here, we dropped all the way down into that deep discount in there. We have this discounted buy side imbalance, and if you also take, and I'm going to highlight all of this, extend that all the way through. I want you guys to do that. All of these up close candles here, so 1, 2, and your third one there are your bullish breaker. Look at where we tapped, right into the mean threshold, that bearish breaker or bullish breaker, and inside of this bullish inefficiency there, which is inside of a discount. And from there we left it. If you go on lower time frames, what is this formation again? You have a low, you have a high, you have a lower low, then you have a higher high here. So what does this up close candle become? That becomes another lower time frame bullish breaker. So once we close above it here, price drops back down into it, immediate rebalance into the mean threshold of the bearish or bullish breaker. We leave that, extend the sell side imbalance to your right, that becomes an inversion. Look at where we're riding, the CE of that. This is your buy side imbalance, which is right here. So we're inside of this buy side imbalance, we're inside of the inversion for value gap. You could also take this sell side imbalance to your right, extend it to your right as another inversion. So the main emphasis is the buy side imbalance, but you like these inversions as support. Price leaves that. Again, extend this to your right, sell side imbalance becomes an inversion, extend that to your right. Price drops back down into what? From this dealing range low up to that high, price drops down into this discount optimal trade entry. What's inside of that optimal trade entry? These two down close candles inside of the discount. That's why we're looking there. These two down close candles together are your bullish order block. So price drops down into that bullish order block. Now again, pay attention closely. What's this formation right here? And this is why we'll use second charts, but I'm going to keep it simple right now. What's this formation here? And what's this up close candle? Extend that to your right. You have a low, you have a high, you have a lower low, and you have a higher high. Price drops down into what? A bullish breaker with a buy side imbalance, which is right in here. That's your buy side imbalance. Everything from the left side of the chart always gets extended to the right. So no matter what, you always want to extend everything to your right. And I'm just looking a little bit further to my right there. This up close candle here will be a mitigation block, and we can see that being respected at the top end there. And ultimately what we're targeting are these relative equal highs here, right? These relative equal highs were the framework, at least in the PM session, to be targeting these relative equal highs, and then looking beyond that, which was the AM session high, and even 21,448, which was left on the table from this morning. So all of that was being traded to the whole time. And you're just working this whole thing up. I mean, that's your homework, is to be marking these things out as I do. I may not do it on live stream like I do in here, but these are things that I see in my mind all the time. I may not put it on the chart all the time, and I do my best during live streams to do it. But if you're not understanding these concepts, you have to be willing to put in the work, and that means back testing or sitting in a real live market environment and constantly marking these things up in real time. And you may not be able to see it right away. You may not be able to see it like I'm able to see it. That's just because I've put in, if not thousands of hours into this, maybe tens of thousands of hours into these concepts. I'm marking these PD arrays up, understanding how they operate and how they, in a good environment, high probability environment, you can see, and this is why even compared to yesterday's, I didn't mark anything up really on the daily log, because it's not as clean. This is very clean price action, and some people could sit here and be like, well, if you know all this, why didn't you just keep trading the rest of the day? Because I understand that I have a fatigue cap as far as my mental capital and all of that. If I take a trade or I win during the session, I'm done. I'm content for the day. Even though I could sit here and trade this up and down possibly, more than likely not, I probably wouldn't be able to, because my mental capital is just my bandwidth as far as my trading knowledge goes during focus, during a session, is only so limited. And we're human, and that is what it is. But these things repeat every single week, so I never fear missing out on anything, especially after a win. I don't need to go back in. The reason I'm stating all this is because something like today, being able to go back in a 1 minute chart and just mark the living shit out of this chart, every single annotation, marking every single little fluctuation in price and the macros. I mean, I could add 100 different layers to this. I could add so much more. If you think this is a lot, I could add a whole damn template to this thing. I mean, I could make this look like a masterpiece. And this is what I would do by myself before anybody knew how I was, or what, being on the internet with ICT privately. This is what I would be doing. And as time has gone on, privately, I've just learned these things in pattern recognition. All of this is easy. I can see all these pattern recognitions. This is the easy part, pattern recognition. Once you get that down, then it's learning emotional control, it's learning discipline, it's learning when to trade, when not to trade, learning risk management, learning your weaknesses as far as psychology. And it's little by little as you start chopping down this big ass tree that you have to basically take down before you're able to become consistently profitable. This is what it takes. But the first step is pattern recognition. You need to be able to pattern recognize all of these PD arrays and be able to do basically what I'm doing in here, and then add on all the layers. And hopefully I'm helping, hopefully seeing these things help a lot of you. And I don't want to make this a long drawn out video, so that'll probably be it for today. Hope you guys enjoyed, and until tomorrow, good luck and good trading, everybody. Be safe.